Hi everyone. In case you haven't heard, Israel is at war with Hamas. Then we'll take a look at sentiment, the upcoming data. Then we'll get into the charts. Then we'll take a look at my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Hamas launched a bunch of attacks into Israel. It was a surprise attack. Hamas being a terrorist organization attacking a sovereign nation from the perspective of the United States. We've had all of the major players on the global stage calling for a ceasefire, and most of them are supporting Israel in this case. Of course, I don't want to go too deep into the politics of it, but in terms of an economic perspective, the question is this going to drive up oil prices? How long is it going to take? And how is that going to affect inflation? Currently, we were hoping for a deal between Saudi Arabia and Israel, but right now they are making deals with Russia to keep oil at much higher levels than it would be if they did produce as much oil as they could, looking at prices between $90 and $120 per barrel. Russia obviously needs this revenue in order to fuel its war in Ukraine, but demand around the world continues to drop, and we've seen prices slip down into that 80 to 90 range. But is this the catalyst that's going to drive oil back up? Definitely remains to be seen, but it is interesting from that economic perspective. Moving over to sentiment here on the AAII survey for the 4th. Bulls still well below on percentage, neutral also well below, bears super high on this week, well above the historical averages, not quite to its peaks yet, but this is definitely worth paying attention to, offset by about 10% in both cases. As a contrarian metric, might be a good time, but there are more bears in the market than bulls. Moving over to fear and greed. For the Friday session, we ended up back in fear. Previous close was 23 in extreme fear, so big rally on the Friday session. We talked about it in the Friday episode. Looking at momentum, we are in fear. Stock price strength, extreme fear. You can see just how low we're getting here, much lower than we've been in a long time, going all the way back here to November of 22. Stock price breadth, also very low. We'll look at that later on the charts. Put-call ratio continues to climb on a 4-day rolling average. Market volatility, back into neutral. Interesting. We'll take a look at that on the charts as well. You can see we're still well above the 50-day moving average. Doesn't mean that we're going to go much higher, but it is something worth paying attention to. Safe haven demand, also in extreme fear. Does make sense with yields continuing to go higher. And then junk bond demand, still extreme greed as the outlier. Moving over to the economic calendar, nothing of note on Monday. Tuesday, we have Fed Waller speaking. 3-year note auction also at 1300. Wednesday, one of the bigger ones, we have PPI at 8:30, 10-year note auction, Fed minutes at 1400. Thursday, this is the big one for the week. We have CPI data at 8:30. This has been a little underwhelming here recently. You can see previous read 4.3%, current expectation 4.1 for year over year, month staying flat. Headline number expected to step down slightly. All of that would be good. We don't want to see inflation continuing higher. We also have Fed balance sheet got below 8 trillion for the first time in a very long time as they continue to sell assets. And then on Friday here, just some Michigan numbers, not much. Moving over to max pain, you can see it's sitting at 426 for this week. Total options, very few, just over 700,000. Put call ratio continuing to stay high on the SPY. 415, 420, very low put walls, giving some opportunity for downside over the course of the week. Calls up at 435. Big range here. Again, doesn't hold a ton of weight just because of how few options there are on max pain. And we'll follow this throughout the week. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see that bottoming tail that we got ended up closing slightly bullish. 0.48%, coming off of that 144 EMA and the medium-term trend line. Momentum still bearish. If we get another hold or a slight step up on this next candle, might see this step towards bullish. That would be interesting. Momentum did step up on this candle with the bullish movement. Also a little bit of a bullish signal. You can see on the volume profile, if we can push up into this 4370 area, that could be interesting. Might find a little bit of resistance in that area right at the 21 and 9 EMAs. They're about to cross here on the weekly chart. Not a great indicator. If we come back into that 21 and then reject, that would be a big bearish signal in my opinion. But right now I am looking for a bit of a continuation on this chart. Moving over to the daily chart, you can see that Friday session was very massive, 1.18% on the day. Momentum continuing to tick towards bullish, shows a much more bullish sign coming off of that 200 SMA. We're above the 9 and the 144. 21 sitting all the way up at 43.62, as well as that medium-term trend line. Could be an interesting area. Really want to see it get back above that and push back towards that highly traded zone around 44.50. In terms of levels here, we are stuck between 428.59 and 431.71, and that's what I'm trading off of for the Monday session. Moving over to the NASDAQ, this has been holding up quite a bit better, but weekly chart up 1.75% on the week. Momentum stepping down from bearish. Stuck right at the 21 and 9 EMAs here on the weekly. Really, you want to see it get above that and start to push higher. If it's going to do it, you really need to see it do it now. Otherwise, we're going to end up just like these previous candles here in mid-August. Get into the zone, reject from there, and get a bigger low. Certainly possible as well. But overall, this structure is still intact, and I would expect to get at least a little bit of a continuation up to that trend right in that 15,100 area. Moving over to the daily chart, you can see this downtrend line that I've been watching. We did get right to that level on the Friday session. Doesn't mean we can't get above it, just like we did here on this Tuesday into a Wednesday. Then we rallied for another 2 days up to that longer term trend line. Currently sitting up around 375. That would be a really nice move, about 10 points higher from current levels. You also have a highly traded zone sitting here around 370. But bullish momentum, big volume on the day, big step up on RSI. Coming off a pretty nice consolidation at trend. Does seem like we're set up for at least a little bit of a move higher over the next week or so. Moving over to the Russell here on the weekly chart, you can see we threw a big pin bar into these previous lows, hit my level at 170.35, ended up closing above 172.60. Not by much, we're sitting here at 173. Interesting level to trade off of. Doesn't mean we can't throw a couple of wicks even lower, just like we did on this previous consolidation before rallying. But this is a very important level, and at this point I'm currently expecting that to hold. Momentum is still bearish, but look at that volume here. And we'll take a look at this on the daily chart. You can see a lot of that volume coming through at the end of the week, just like the other charts that we looked at. You can see just how important this zone has been multiple times over the last year plus. And again, I would expect that to continue and look for at least a little bit of a rally up into that 185 area. Moving over to the daily chart, you can see 2 days in a row of consolidation at that level. Big push up on the Friday session. Got above that level just like we saw on the weekly, touched the 9 EMA, and this is still definitely a downtrend. We're below all the EMAs and SMAs, but if it's going to hold, it does seem like it's going to do it now and at least get a bigger move, or at least get a pullback up to the top of this downtrend, just like we saw here, consolidation, push up to that downtrend line. If we did see a move like that, again, up into that 182 area, just a little bit short of that 185 highly traded zone, you can see all that volume that came through in this previous area right at the 200. On the daily chart. Again, if it's going to do it, really needs to do it soon. If this area breaks, there's a lot of downside potential. Major trend sitting all the way down at 162.50. Moving over to the Dow on the weekly chart. Again, another big pin bar. The Dow does look a little bit stronger than the Russell. Hit my 329.40 level. We've been talking about that level for several weeks at this point. Critical level. You can see multiple pins here in December. Hit that same level in May. Both of those ended up holding. The test here in February, we did break down from there, but we rallied back through and then made a much higher high. So critical level, still bearish momentum, but volume ticking up, and you can see that here on the week. Highest volume we've seen going all the way back here to mid-March, and that ended up being a nice move over the next several weeks. Again, it seems like this is a reversal candle, but we do need to see a confirmation to follow up next week. Moving over to the daily chart, you can see that Friday session, big candle, 0.88%, momentum continuing to tick towards bullish. You really had the break of bearish momentum on the 28th of September. We did get a continuation lower on price, however. You do have to watch price. This is just an indicator, but now we have price going higher and the indicator confirming that. We also got the cross of RSI on that SMA, volume ticking up. All of the signs of a potential reversal, or at least a short-term move higher, just like we saw here at the end of August. And I would be looking for a retest of this 339 area. In terms of levels, you still need to see it get above 335.91, and to the downside, still watching 329.40. Moving over to the equal weighted S&Ps, basically a combination of the Russell and the Dow. You can see big pin bar on the week, massive volume. Last time we saw this kind of volume was mid-June, and as we got those candles, it ended up being a much bigger push higher over the next several weeks, just like we saw on the other charts. Again, it needs to hold. You want to see it get above 140.24. That would be nice. We're throwing wicks to these previous levels. We hit that 137.23 area just by a little bit. Might overthrow it and hit that 200 sitting at 136.23. Just because we threw this pin bar doesn't mean that we're going to see a bigger move higher immediately. Still could show a little bit lower lows, but we are showing signs of reversal in this area. Moving over to the daily chart just for a moment, you can see that momentum looking similar to the Dow, had been getting out of that bearish momentum, but price continued lower, showed strength on that Friday session, showed volume with it, cross on RSI, similar setup, and if this trades back up to the highly traded zone, that would be up around 147, which would be a nice 7-point move higher. Moving over to copper versus gold, starting off with the ratios here, you can see we gapped higher on the week, sold off, hit that highly traded zone, ended up closing higher than the previous week open, so we still are holding some bullish momentum, and you can see that here. RSI not showing much of anything. Zooming into the daily chart just a little bit, you can see we pushed into that 200 SMA, rejected from there. Typically the first test does reject, finding support right in that zone like we talked about. Got a nice bullish candle on the Friday session, and I'm still expecting this to push up into that same zone. Thesis still intact, just taking a little bit longer than I would have expected. Moving over to SPY Russell and NASDAQ SPY. Both of these breaking out here. Russell continues to underperform. Doesn't mean that it can't show bullishness, but it is underperforming at least in the short term. Big push higher SPY Russell above that 242 area. Last time we got above this level and held was going all the way back to the 2000s, which obviously was the dot-com bubble. And you can see we did get above it a little bit here in the 90s. Typically this level of extension does not hold forever, but it doesn't mean that we can't trade this to the upside, at least in the short term. Zooming out on the NASDAQ SPY, however, this is just about at the all-time highs. We do have a level here at 355. We're above those dot-com highs, and you can see here, once again, getting a push higher, looking for that 355 level. If we do hit that, that could be interesting, potentially showing an area where we could see weakness in the NASDAQ. If we see a breakout, maybe we're looking for even more bullishness in the NASDAQ relative to everything else. Moving over to the SPY versus the M2 money supply, we did see a little bit of a bullish week, as we saw on all of the other charts. And right now this is just looking like this first dip low, basically in the exact same time frame as we saw last September. Then we rallied up here into October and November, made some higher highs, and then we eventually broke down starting the new year. If we see a similar trend to that, we should see a couple of weeks of bullishness back into the same high, and then that could be the ultimate turning point where we see much more weakness over the next year. So definitely something to keep in mind over the next several weeks into the end of the year, looking to be a little bit more bullish, and then we could see weakness. Moving over to Apple and Tesla. Apple pushing much higher on the week, 3.67%, coming off of that 170.90 level, right at the highly traded zone. If this pushes up to the downtrend line, that could be in the 185.50 area. Momentum ticking towards bullish, RSI getting back above the 50 line. If we see a retest of the previous high, that would be up around that 194 area, and then longer term resistance sitting up around 220. Don't necessarily think we're going to get there, but it's certainly possible, and this looks a little bit more bullish. Last time we saw a bullish week, we saw a nice continuation of around 6% in the next week, and that's certainly possible here. Looking at Tesla, 2 bullish weeks in a row, still have trend resistance up around 167, but this is a nice bullish week, and I would expect a continuation. If this downtrend line breaks, 280, certainly a possibility, and then 302, I've been watching that for a while. You can see we hit those levels in August of last year, and I think we're due for a retest of that area in the next month or two. Moving over to Microsoft and NVDA, probably the second 2 highest leaders in the markets. 3.65% for Microsoft, 5.2% for NVIDIA. Continuing to hold that 315 level, looks like a double bottom here now. If this breaks out above that midpoint, we could see a retest of those highs. We did see a wick high up to that 362 area. That would be a nice bullish move for Microsoft. It certainly seems like it's within reach. Similarly here on NVIDIA, big gap up, big rally. If we get above this trend line, we can see a wick to these previous highs up around 500. That would be about a 50-point move from current levels. And then just beyond that, we have 540. Seems like it's within reach. Moving over to staples and discretionaries. Staples continues to fall off a cliff. Threw a wick to that 66.27 level, took out this previous low by a bit, ended up holding the level, but still bearish momentum, still bearish RSI. You can see a nice volume tick up on that. Did see a little bit of a rally on the Friday session after hitting that level. Obviously, you want to see some kind of continuation and confirmation to the upside. This is still a falling knife technically. Discretionaries, on the other hand, 2 dojis in a row, right at that 158.03 level. Want to see it get above 162, potentially push back up to these most recent highs around 175. That would be interesting. We are getting the cross of the 9 and 21 EMAs on the weekly chart, however. Bearish momentum, bearish RSI, but big volume on the week, just like everything else. Potentially a turning point at that 200 SMA on the weekly chart, sitting at 156.47. Moving over to transports on the weekly chart, you can see 2 pin bars in a row to that 55 EMA sitting at 230.20. I haven't been talking about this one for a while because we've been in this pretty consistent falling knife here recently. Bearish momentum, bearish RSI. Volume not really confirming a reversal yet. You want to see a confirmation candle taking out this previous body, step down in bullish momentum, step up in volume. That would be nice. But we are throwing wicks to this previous consolidation. You can see this highly traded zone here. Definitely interesting. If it's going to hold, you'd want it to do it now. We're also at this shorter term trend line. All critical areas where we could see buyers coming in to start reversing this downtrend, as well as sellers starting to exit their positions as they've basically accumulated around $30 of profit. Seems like a good area, but waiting for some more confirmation to the upside. Moving over to breadth, 50-day average continues to hold in this area around 15.15. Threw a big wick all the way down to that 6.5 area, but momentum stepping up here towards bullish on the weekly chart. We've been in a critical level here on the 50-day average for 2 weeks in a row here now. 200-day average continuing to hold that 36.23 level. Threw a wick to these previous ones, ended up holding that level. Momentum and RSI are still bearish here. Again, waiting to see some kind of confirmation to the upside. But stepping down to the daily chart on the 50-day average, you can see 3 bullish candles in a row. We're above the 9 EMA, bullish momentum. It does seem like this is setting up for at least a little bit more of a pullback, at least to the 21 EMA. Again, you want to see more follow through here to confirm a little bit of an uptrend. Moving over to yields just for a moment. Don't forget the 10-year yield is still sitting at its most recent highs, throwing wicks towards that 5% level. If we get above 5%, that is definitely going to spook markets. I don't think we're going to get there on this run. It's already been really large, going from around 4% all the way up to nearly 5% in basically a straight line. Not great. 2-year yield chopping at that 5 level. And I would like to see these pull back at least a little bit over the next week or two. Moving over to the dollar on the weekly chart. It finally happened. We got a bearish candle, the first one in nearly 3 months, going all the way back to July here. Straight bullish run. Got all the way above 505. We've been talking about that level for a while. Got up to 106.8. Couldn't hold that level, and then we've broken down. A little bit of a topping tail style candle. Momentum stepping down. Does look like a zone where we could start to see at least a little bit of a pullback. Just like everything across the board, I would like to see at least one more confirmation candle. Pull back down to that 21 EMA around 103, and that could give equities a little bit of upside potential. Moving over to bonds just for a moment. J&K sitting at 89. We saw some prices like this in October of 22, COVID low, and then all the way back to 2008 were the most recent times we've been at levels this low. Obviously, this looks super weak. And zooming in here, you can see we've basically fallen off a cliff over the last 3 weeks. Similarly here on TLT, last time we saw the same prices in 2003 before we had a nice rally in bonds going all the way up to that 170 area. Now we've been cut in half back into this 85 area. Again, zooming in, you can see this is still a falling knife, but volume has been substantially stepping up as this sells off. And this might be an area where some buyers finally start to come in, just like we saw on the previous charts. An interesting area, but want more confirmation. Moving over to the VIX, 2 pin bars in a row right into this 55 and 144 EMAs. Still bullish momentum, But again, interesting level, could reject from here, really needs to hold and rally up on this next candle if it's going to do it. If we see a confirmation lower, we should expect equities to be going higher, and then I would expect this to move back down into this 1177 area, and that would bring us to prices going back to 2018 and 19. Certainly a possibility over the next week or two. Moving over to my accounts, you can see I was up a couple $100 on the week. You like to see it. In terms of positions, I have a covered call here on the IWM. I think we'll see a little bit of follow through into the Monday session. Similarly here on the Qs, I am deep in the money on these covered calls, so not really looking to get any more money out of those positions. I might continue to roll these out depending on what we see, but I do have a put here at 361 for 74 cents. I'm already at about 50% profit on that, might roll it up. Definitely going to have to keep an eye on these Qs positions. If we continue to show bullishness, I'm going to have to roll up and out to try to get some more money on those. Otherwise, if we see a little bit of a dip early in the week, maybe that'll be an opportunity to reset these positions for some more bullish price action, and that is what I'm expecting over the next week. Let me know down in the comments section what you think of the Israeli-Hamas conflict and how that's going to potentially affect global economics outside of just oil prices. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.